So let's start the recording. Jump in over here so I can catch the live stream. Hey Fady. And like that we should be fine. Alright, let's open up TradingView. Well, so far nothing happened, but I didn't really expect anything major to happen. So what I've done earlier, just before the stream actually, after I saw the news candle here at 8:30, I had one Funding Pips account that I barely took any trades on because I got a couple of them. So I decided to just risk the account, or yeah, blow it or make it essentially. Risk 2,500, essentially the daily loss limit, 5%. Right here on S&P. So I essentially went short. Just, yeah, I don't know, you could consider it pretty much retarded, but all I was looking for, I actually risked $4,000 looking for a one-to-one to pass the challenge in one go. But, well, after we hit the sell side liquidity, I was pretty content having made $2,500 on that challenge, on that quick trade here without any issues or troubles. And then price started to consolidate a little bit. So yeah, I was happier, even though like it could still play out. I just marked out this major sell side liquidity here. Could still continue lower from here. Down here, Monday's low, 22nd of April. We also have the low of week. This was essentially the idea. Yesterday on the live stream, we took yesterday during the tapering session, we took the high of week. Reversal opportunity right here, but on a 5-minute time frame. We already talked about that on yesterday's live stream. Market structure shift, breaker block, continuation lower. But yeah, well, I'm not the guy holding this trade forever. We actually had a little bit of a, what did we do yesterday, if I remember correctly? Yeah, yesterday's stream, we tried one long of this inversion fair value gap right here with our stop loss at this candle's low, targeting the high of week so far, Wednesday's high. Very simple one-to-one risk to reward ratio trade, but as you can see, we got stopped out here. And then I think by the time of this candle close, so right here, once we closed or really pushed below that final bullish fair value gap, that was really the sign for me that, all right, I think the New York session high has been formed. So I entered on this candle somewhere like this with my stop loss at the high. Now I actually chose this high. Very confident, also based on the SMT divergence between NQ and the S, that we are not, I actually took that trade on NQ, but it's essentially the same thing. Looking for, let me pull up NQ, what we actually did here. I think ES formed a new lower low. So it's going to be a little bit of FOMO for me, because I could have been done with that challenge if I would have kept on holding. But, well, it's never as simple as that. We all know. But so far, well, order flow. I know I'm talking about a lot of different things at this moment, but just looking at bearish fair value gaps here on a 5-minute time frame, they're beautifully getting respected. Right here. We have another one right here. We haven't filled that in just yet. After this 8:30 news candle to the downside. But what I wanted to talk about is the short I took yesterday here on NQ. So on NQ yesterday, we had this SMT divergence between the London session high and the New York session high. So once we pushed below this fair value gap right here, I decided to jump in on a short, just because I had a high conviction that this is going to remain as the high of the day. Also potentially the high of the week, but I'm not a swing trader. I don't hold trades overnight. So I was simply looking for, I don't know, I got my entry, I think somewhere around here. Stop loss used to be this high. Essentially looking for this low to be run. Here we go. It ran to 1.5 risk to reward, something like that. Reached back to break even. My stop loss was still above here. I didn't care. Actually wasn't even checking my phone. I kind of forgot about it. And then after 4 p.m. it had this massive drop. And once again, where did it drop from? VWAP. Damn, that's not a circle. VWAP. VWAP is a great confluence, but nothing more than a confluence, so don't get me wrong. Not during Asia. I'm not using VWAP during the Asia session. VWAP really starts to make sense when, because it's a volume weighted average price, when there's actually there has been a significant amount of volume put into the market, and it usually happens at the London Open and at the New York Open. So after the New York Open, it's usually a good time to look for potential support and resistance at the VWAP. It's not like the VWAP is a, well, I don't know, a solid wall that cannot be broken. We've seen it right here. It's something more of an area, because market makers also aren't as precise with their market making, and they just use the VWAP for reference. And yeah, well, anyway, I'd say with a 1% tolerance, 1% might be too much, but you know what I mean. This should be more sort of a range. I think I made an indicator about that before. VWAP baseline. Then it looks like this. Then you have that sort of a baseline, but it gets bigger the longer the day gets, or yeah, the further we get into a specific trading day. That's what I didn't like about it, but you get the idea. Let's get rid of all these drawings. And see where we're at right now. And maybe recap the London session a little bit. To be honest, I'm not sure about you. You can let me know in the chat, but I'm not super interested in taking any trades here on NQ right now. The only interesting thing would be this humongous new day opening gap to be filled in, at least partially. We have our new week opening gap just below. It could be interesting. We didn't fill in this gap, and now we gap below this new day opening gap, essentially. Not new day opening gap, but I might have to murder my sleep schedule to join. Yeah, Fady, hey H. Smith. Not gonna lie, there are good seasons, yeah, you know what I mean with seasons. Good seasons to trade the London session, and there are terrible ones. So many times we've been in the tape reading chat over the past few months, if not even years already, where we said, ah, damn, London's trash right now. Maybe I'm gonna skip the London session and only trade New York. It's shifting. On some days it's gonna be the London session that delivers the A+++ setup, and on some days it's gonna be the New York session. Most importantly, I wouldn't sacrifice my sleep for it. That's way too important for me. It's always that thing, those things that you can't have, you want them the most, if that makes sense. Good job, H. Smith. I have been going back and read what you guys see. Yeah, well, recently we're getting pretty good at it. It's only me, Bongo, most of the times, and Katio trading London together. We can take a look at it here for a second. We're not talking much. We used to talk a lot, but nowadays it's just, yep, long, short here. Okay, what's happening on the higher time frame, and yeah, then essentially we execute. It's really simple. Yeah, no crazy stuff happening here. Simple textbook setups like the 2022 model yesterday after the Asia high sweep, the one that I alerted. Yeah, I think that's the main point, to keep it simple. But now I'd say let's quickly recap the London session. Maybe wait until 10 a.m. for the New York session. See if we get some sort of a setup. I'm not really... Well, I could show you guys the 4-hour... Where are all my drawings? Maybe inside group 1? No. Because we've done all that stuff yesterday, and now it's already gone because I didn't label the folder. So I might just have to do it again. Start off fresh. Alright, but let's start with the London session. What we've done this morning, essentially on NQ, Katio took the trade on NQ, I took the trade on ES, because I like the ES setup a little bit better. We broke below the Asia session low. First of all, we open up with a pretty big new day opening gap right here. We broke below it, continued lower, and the main point right here, all I've done this morning essentially, is looking at market structure, forming lower highs and lower lows, and we can see that, well, that's just some of my observations, that they are getting compressed. If we, compare the amount of time we take to form a higher high, lower low, lower high, lower low, lower high, lower low, it's getting squeezed. And then right here at 2:30, also pointing it out every stream, really watch out for those 30-minute mark reversals. So 2:30, 3:30, 4:30, 5:30, 6:30, 7:30, 8:30, 9:30, 10:30, blah, blah, blah. You get the idea. 2:30 or essentially any 30-minute level time mark between, 50% level of a hourly candle. You know what I'm talking about. You get the idea. At 2:30, price likes to turn around. That's just one of my observations. And if I see that happening at the low of the day, first of all, paired with a market structure shift and all that stuff, well, I'm just really interested in taking that trade. I'm not using it. 30-30, exactly. I'm not using it to, well, just go long or short at the 30-minute mark. I like to use it as confluence, like the VWAP, for example. Interesting. What's the time? It's 44, 15-minute time frame. Let's see if we actually get the market structure shift confirmed. But we continue with our London analysis first. Looks like it. We still have Asia session lows. Monday's low, essentially here. No, Tuesday. Take a look at the S&P. S&P is struggling. Didn't make it above those fair value gaps just yet. Damn. All right, here we go. So yeah, usually what I do here, if I see that we're pretty far away from the VWAP, I use the VWAP as my baseline essentially. So usually we like to play around this level, spend some time below it, get above it, recheck, retrace, push above it, hold support, make another higher high, but eventually retrace back to our baseline. That's at least how I look at the VWAP. For example, right here, we've spent lots of time away from the VWAP, and eventually we come back to it. Like I said, it's not a fixed wall. Price can go above and below it. It's just a reference point. Okay, we've been away from the VWAP for a while, so it might be interesting for price to return back to the VWAP, volume weighted average price. But where did I stop here? So we have news in 15 minutes according to H.L. Smith. I didn't check the news schedule. Let me take a quick look. Yeah, 10 a.m. pending home sales. Don't think they're gonna be too much of an issue, but essentially for everyone that wants to take the trade, this is your breaker block setup at the current low of the day. We took out sell side. But we still have, at least here on NQ, more sell side to go that we have already cleared on ES. Just pointing that out. Let's make this previous day slow and call it Tuesday slow. Font size 11, of course. We always do that. All right. That's the Asia session low. Let's actually make this one red, so we don't have to zoom out every time. Is anyone in that news event short? Short, what am I talking about? Long. So right here we have the news event. We have Tuesday slow. We took out some liquidity right here. I think that's very obvious to see. But well, I'd say it depends what you're looking for. If all you're looking for essentially is just first short-term high being hit and then maybe the VWAP, just looking for a quick scalp, I think it shouldn't really be an issue. But usually if we do those types of market structure shifts just before a significant, also higher time frame liquidity pool, I mean, those lows are visible on the hourly time frame, I think so at least, yeah. But, well, those lows really, steal the show. We also get a new hourly candle soon, where we likely gonna be leaving behind a bearish fair value gap on the hourly time frame. Actually, that looks pretty interesting, so let's take a look at it and make sure I put everything into a folder. What happened this morning is, first, on the hourly time frame now, we opened up, we formed a high, a lower low, and a higher high. So essentially, we could label this as seek and destroy. Right here, this would be your bullish break-in structure. Down here, this would be your bearish break-in structure. We formed a high, continue lower, breaking structure, forming that new lower low. But instead of forming a new lower high and a new lower low, we broke structure to the upside. And after breaking structure to the upside, we didn't stop right here. I mean, we could have continued higher of this bullish fair value gap. I also had this in mind earlier today, on NQ at least, that we could potentially hold support, but the 8:30 news candle said no to that setup and essentially negated all of that. So what we have right here is a inversion fair value gap and a new break-in structure, sell side below. So we could be looking at the slowest down closing candle as our potential breaker block on the hourly. Because I think the direction of where we're heading towards has been confirmed. I think it's hard to deny that unless the chart's going to look like this after taking sell side, immediately turn back around. So what I think could be likely is that we are going to fill in this bearish fair value gap overlapping with the breaker block on the hourly. Which just makes sense to me. Before we take our Tuesday slow, if we bring that back to the 5-minute time frame, actually not looking too bad. See that? We even had a bullish fair value gap overlapping with a inversion fair value gap down here inside our breaker block. So right here, this is our bullish fair value gap now on the 5-minute time frame, overlapping with our inversion fair value gap right here. And essentially, we would be looking forward to see this hourly bearish fair value gap paired with the breaker block being retested. And where would this happen from? Well, essentially, this breaker block. So, well, I mean, might as well take a look at the S&P first. The S&P is still struggling, not showing any signs of strength at this moment. Damn. Well, NQ shifted structure. Now, I think I will pass and wait until after the news event. Okay, so 1 hour bearish fair value gap. 1 hour breaker block. This is our 1 hour seek and destroy from earlier this morning. We don't need those. Let's leave it on here. Come. Why not? Let's watch this setup and see how it plays out. Imagine a paper trade here looking like this. Stop loss at the low. Maybe at 50%, but this would already be an ambitious target if you ask me. I would make sure to take partials right here and right here inside that breaker block. We have the VWAP at that same level as well. All right, that's essentially what we could be looking for on NQ based on the hourly, which is going to be, leaving behind a breaker block. Mm, 11. We have news in 15 minutes. We already cleared all these lows. Bounced off that lowest down closing candle. So let's see. Let me put those two in a 1 hour folder. And 3 trend lines in here with it as well. Now let's actually call it higher time frame. No, leave it at 1 hour. Point of interest. 1 hour time frame. Everything else is gonna be 5-minute time frame stuff. Put that in a folder so we can organize everything a little bit better. 5-minute. Let's take a quick look at the 4-hour time frame. Rejecting of the 4-hour bearish fair value gap. Got a new 4-hour candle very shortly at 10 a.m. Bullish fair value gap here on the 4-hour. We're very likely going to close below 17,404. I guess it's just going to be interesting to see how that news event is going to play out. I don't see anything that makes lots of sense on the 4-hour time frame. If we go to the daily and quickly hide all that stuff, get a nice and clean view. We have our SMT divergence between S and NQ right here. Higher high, higher low. Right here we had a final fake out. A quick sweep. Let's call it, put that X here. So we take out liquidity. Purge and revert essentially. Some seek and destroy. That's what people usually reference or call distribution phase. After a rally to the upside, they can't just dump all of their shares or their open positions at once. If someone wants to sell their positions in profit, let's for example say a market maker, someone else needs to buy them. Got a match. So after taking out the sell side, we return. Yes, looked a little bit cleaner. If I remember, let's turn on contract adjusting. Well, that doesn't change. We have the SMT. We have a daily bearish fair value gap right up here. Right up here. Big new day opening gap. And actually 2 inversion fair value gaps. Because we closed above both of them. We already invalidated the first one, and with this new day opening gap, look how perfectly this candle opened. Almost exactly at the low of the inversion fair value gap. Filled in the gap, and now it's running lower. So really, in terms of the daily time frame, we could be looking at all these lows as our next targets for the continuation lowers. So far, there hasn't been any signs whatsoever of this potentially turning around just yet. We also have a bullish fair value gap here. We can see that we essentially gap below this bullish fair value gap. So right here, inversion fair value gap. How many minutes? 2 more minutes until the news candle. Bullish fair value gap. And we managed to, well, essentially gap through all of that. After invalidating the first one, rejecting from the highest one of those 3 down closing candles, we filled in the inefficiencies. And we are turning around without showing any kind of respect to the inversion fair value gaps. Let's take a look at how the settlement prices look. Even worse. Perfect. So we have sell side identified. We have our daily time frame analysis. Once we break out of this range, this would be another target. And then this one right here. On our way to the downside, let's see if we can spot any bullish fair value gaps that haven't been filled in yet, or that have been used as support. Well, we're actually, let me check that out. So here's our all-time high. We pushed above that. Above here, we started to distribute. And this is our entire 2024 move to the upside so far, Q1 of 2024, right here. That's December. We opened up right here on the 2nd of January, retraced, and we pushed up higher from here ever since. So right now we're essentially right inside that optimum trade entry for the continuation long, but I'm not really sure if it's going to give us that. Bullish fair value gap, that's where we left off. So right here we closed below, but had a nice gap back up, pushed back, bounced off the consequent encouragement, and refilled or redelivered all these inefficiencies. I just want to have this all drawn up, essentially, to see how that corresponds to something on the lower time frame. This is our inversion fair value gap right here. We used to hold support here twice on our move to the upside. Now we close below it, and so far we're respecting it very nicely. So let's put all of these things into the daily folder. So we don't have to do it over and over and over again. Now let's see what that looks like if we look at it on the hourly time frame. First of all, quickly have to realign some of these things. That's our daily inversion fair value gap. Our daily bearish fair value gap where we rejected from. No, all right, news already happened, like said. Didn't expect much for this news event. Let's see if our overall setup holds up. So now all I have to do, if I want to see where we're currently at on a daily time frame, let's say I want to check out what it looks like on the hourly time frame, we have this breaker block idea. If I want to see what's happening on the 5-minute time frame, our points of interest could essentially be, could stay on 1 hour time frame and daily time frame. All I have to do is enable, disable those things. Points of interest gonna be right here. Done, and that's essentially all the analysis we need for NQ. Multi-time frame. If there are any questions, feel free to ask. You can see ES is really losing it. Yeah. Strength just keeps on going lower. By now I would have likely passed the challenge. Yeah, I think so. So right here, that's the trade I was talking about. From 52.12 till 52, so essentially 4%. Yeah. I don't know, guys. Do you have any potential setups other than a simple short continuation? We already have SMT between ES and NQ. Because ES already cleared Tuesday's sell side liquidity right here, this orange level, we've already cleared that. That's why I closed my position prior to the London Open instead of letting it run. Yeah, sales were nice yesterday, and what we did during London today was also pretty nice. We had, yeah, we talked about it earlier, but I stopped talking about it. Market structure shift, price being held up. So instead of placing my long entry down here and blindly trusting something, and yeah, I don't know, it would be hard for me to take this entry and hope it's going to reverse. I much rather prefer to wait for confirmation that the retracement is over and done with. And well, what would that confirmation be? On this retracement to the downside, we left behind one nice bearish fair value gap. We're bouncing off our bullish fair value gap, so that's my main confirmation. And then my entry confirmation would be the invalidation of the only or the lowest bearish fair value gap of our retracement leg. If we look at this, no, not XAB pattern, where is it? So right here we push up higher, we shift market structure, we retrace into our optimum trade entry. But I want a confirmation that the retracement is actually finished, and I get that confirmation once we close above the lowest discount that has been left behind, because that shows me we're still respecting bullish order flow and at the same time disrespecting newly formed bearish order flow. And with order flow, I essentially mean fair value gaps. We close above it, we come back to retest it. We also had a inversion fair value gap here, but the main focus for me was on this bearish fair value gap inverted after this candle close at 330. That also, well, played into the cards why I took the long here. 330, yeah, we could turn around. Like said, we saw the same thing here at 230, price turned around. 330, price turned around. 330 opened up down here and it turned around, inverted the fair value gap, bounced off the previous day's low right here, right at 50.72 and a quarter. Bounced off here, consolidated for a little, has been, yeah, held in between VWAP, midnight, and the previous day's low, paired with the inversion fair value gap. But eventually we hit our targets, which for me mainly was this unfilled volume imbalance. And I prefer to take my profits up here instead of holding for that Asia buy side. But we can see that up until we hit the Asia buy side target, we never got a confirmation for bearish order flow. We look at it, okay, we held support on our inversion fair value gap, we push up higher. We leave behind a new bullish fair value gap up here, our highest bullish fair value gap, and we end up holding support and form a new higher high. So right here we hold support. We leave behind 2 new bullish fair value gaps, but they're so close to each other. So most of the time what I'm doing then is I'm just looking for either one of them to hold support. Most of the time we fail to hold the highest one and we actually retrace into the lowest one. As long as I don't see the close below this bullish fair value gap, we're pretty much good to go to continue into buy side liquidity, and that's what we've done. But we took our time. That's once again, like I spoke about earlier, that distribution at the high. So price cleared the Asia session buy side liquidity, immediately turn around, and now that's where it really gets interesting. I haven't been around at that time on my computer, but this would have been a great opportunity. 6 a.m. new 4-hour candle opens up. We retrace into a bearish fair value gap. We perfectly respect that. That's just how ES trades sometimes. That's why I prefer ES over NQ. Then, next thing that happened, we closed below our old support fair value gap, because right here, we retrace into the support fair value gap. We push into buy side. We reject from buy side. We start to respect bearish fair value gaps, and then we break support fair value gaps right here. We closed below it. We also closed below this support bullish fair value gap. So now, I think the chances of this being some sort of a, well, you can't call it M formation. You could call it a double M formation if you would like to call it that. That's the only thing that makes sense to me right now. Double M formation. Confirmation closed below all our bullish support fair value gaps. And what happened afterwards? Well, first we retraced to the VWAP. 6:15 now, so the first 15 minutes of the new 4-hour candle have been delivered. Also new hourly candle. We come back to retrace our key inversion fair value gap, essentially. The one that we used to deliver into Asia buy side liquidity. We close right at the high, volume imbalance above it, but we immediately close it in. And also close below this volume imbalance. Nice confluence. Retest VWAP, reject. Not the cleanest delivery, but in terms of respecting fair value gaps and inversion fair value gaps, pretty clean. Then we continued lower from here. Afterwards, we entered some seek and destroy formation. We formed a low and a lower high, a lower low, and a higher high, a lower low, and then a higher high again. So this is your textbook seek and destroy. If you have been caught up in here, well, you should have simply waited until after the news event, right here. We've got the drop eventually into the low of the day and pushed nicely through that. So very nice price delivery if we look at it. Starting from 230, nice market structure shift, optimum trade entry, inversion fair value gap setup at the previous day's low. Also aligned with time, 3:30 a.m. after first 30 minutes after the London Open, 3 a.m. Took buy side liquidity right here. Next 30 minutes of that hourly candle, they trapped traders short. Aggressively turn around on those new shorts. That's when we enter long, or at least when I enter long on the inversion for the full pull reverse or the simple 2-to-1. But that's the recap for today. Let's actually start to take a look at price action right now, and it is pretty boring, not gonna lie. What is interesting is that our breaker block setup here is actually still holding up nicely on NQ. We also have it paired with SMT divergence now. Because the S actually formed a lower low if we compare those two lows. But we don't have a nice 5-minute time frame fair value gap to use as inversion fair value gap. The first bearish fair value gap would be all the way up here. If we would have one right here, we could use that inversion fair value gap to easily scalp a long paired with SMT divergence into all these relative equal highs and maybe even back to the VWAP. 10 a.m. Bullish SMT divergence. Retested the VWAP. Cleared first buy side target. And see if we can hold up above that level. Next bearish value gap would be right up here. One minute time frame wise, we also don't have a good 1 minute time frame fair value gap. I think the only fair value gap that we had available would have been right here. If we take a look at it under the microscope, bearish fair value gap, we perfectly respect it. We keep rejecting from there until we push above. But so far we haven't seen retest yet. That's really the only fair value gap we can reference in this entire move to the downside. So right here, actually pretty nice price delivery. If we look at it from the 1 minute time frame perspective, what we can see, or at least what I see, is the 9:30 opening. We continue lower, form a new low of the day right here. Form a new low of the day. Use a bearish fair value gap. Actually, fair value gaps have been respected nicely. Bearish fair value gap, we close above, but we immediately get back at the upper end of the bearish fair value gap. Immediately reject, then we consolidate perfectly below our old low of the day. 942, we immediately push back up, leaving behind a big fat bullish fair value gap, failing to take out buy side liquidity. So leaving relative equal highs behind. And at this point in time, once we close below this bullish fair value gap right here, see that? Bullish fair value gap. We close below it, leaving behind a new bearish fair value gap, failing to take out buy side liquidity. This would be a pretty nice setup. Bearish fair value gap overlapping with a inversion fair value gap for a quick scalp into new sell side liquidity. From here on, it kept respecting bearish fair value gaps, as we can see. But a rather hard one to trade this reversal, because so far we really haven't used, well, this would be the first interesting thing to see if order flow is that bullish to actually hold support, you know. The next inversion fair value gap would be all the way down here. And see if we use that to immediately deliver into buy side liquidity. Right up here. Take a look at NQ. NQ about to head. Where's the 2-to-1 risk reward? Right up in here. So looking at the hourly time frame on NQ, we can see that right now we are inside our 1 hour bearish fair value gap and our 1 hour breaker block. And I still think Tuesday slow would be interesting. But I want to see some confirmation here. So I want to see some short confirmation somewhere inside this area for the short into Tuesday slow. Because if all you do right now is look at the hourly time frame and say, okay, I'm going to go short right here. And let me hide the 5-minute stuff to show you what I mean. Of course, we could play it like this and say, all right, we're at the breaker block, put our stop loss above here and target Tuesday slow for our continuation lower setup, but shorting into this, if that's happening on the lower time frame, I'm not really a big fan of that. So I would like to see some sort of a setup being presented on the 5-minute or 1-minute time frame right here at the high, and then taking it short from there. And at the same time, I can also reduce my stop loss and stretch the risk to reward ratio if I get somewhere in here. stop loss at the new high, maybe able to catch a 2-to-1. So the analysis that we pointed out earlier that we are going to leave behind, essentially this one, we are going to leave behind a bearish fair value gap right here on the hourly paired with a breaker block. Seems to be playing out with our market structure shift 2022 model setup. I was close. If H.L. Smith wouldn't have told me that we have news in 15, I would have been in that long. I think sometimes it's almost better knowing that there is no news event, even though there is one. I don't know. At least for every news event except for NFP, CPI, FOMC and stuff like that. Usually at 8:30, that's where we get that volatility. At 10, it's pretty rare. Usually we already have a setup, a pre-existing setup at that time, like this breaker block reversal setup, and it plays out because setup outweighs news event. We already know what market makers are going to do, or what smart money is going to do, because they've shown us with this market structure shift. And they're not going to, well, at least on a housing blah 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 news event, going to disrupt what they have been setting up prior to the news event. They also have to set something up like they have set something up, if we go back to ES over here, for the 8:30 news event. Seek and destroy, going sideways prior to the news event. Rating stops and heading lower. By the time, or even before news event was released, they already had a plan. And well, essentially our job is, especially if we trade news, or if we want to predict what's going to happen on that news event, is to figure out what they've been setting up, what traps they have been laying. That's our job. And right, we already hit it. See, we used this inversion fair value gap and ran into buy side. Not bad. Not bad. But you get the idea. Of course, it's still dangerous because this wick could have simply be a little bit lower at the 10 a.m. news candle, take out your stop, and then do this. So, yeah. Being conservative. Any questions, guys? Otherwise, I'm going to fill up my water bottle and we'll be back shortly. So we used our 1 minute inversion fair value gap nicely. Let's see what we do here. I don't know. I'm not sure if I'm going to take a trade during the New York session today. What's the time? It's 10:20. So my call would be to see a reversal at 10:30. So we switch gears from bullish to bearish to run into Tuesday's low. Let me take a look at gold. I also took a short right after the 8:30 news event. Right here on ES. So right after this candle closed. Just looking for a simple one-to-one continuation right here. All right, so much for the 1 minute time frame. We cleared relative equal highs. We have a bullish fair value gap right here. We haven't tested the VWAP just yet. You can already see the difference between S and NQ. NQ being somewhere in here, while the S is still down here. Get rid of some of these drawings, that's just annoying. Don't need to see all of that. Damn. Also haven't retested the 1 hour bearish fair value gap on here, so this would essentially be your draw on liquidity here. If you think that we are going to fill it in. Before we essentially head into our low of the week at this moment. Yep, took 950 macro. Yeah, the only, I don't know, I looked at it, we pointed it out here on NQ. 5 minute time frame, breaker block, bullish fair value gap inversion, fair value gap, bullish SMT divergence. The only reason I did not take it was the news event at 10. Thought it would be a little bit unnecessary if I were to take along here knowing that we have news in 5 or 10 minutes and then getting wicked out. Didn't seem worth it to me. Nice. So we're inside our 1 hour bearish. 7 minutes to go. Now, I'd say this would have been the opportunity so far during the New York AM session. So post 9:30. This 2022 model right here. Of the breaker block into the 50% of our hourly bearish value gap paired with the breaker block. But looking for the continuation from here, I wouldn't do that. I would wait for, if anything, the hourly time frame confirmation close above it to invalidate it, or yeah, something essentially within the next 5 or 6 minutes signaling weakness for a reversal inside the 1 hour breaker bearish fair value gap. Our first inversion fair value gap on ES. Now I think for me it's going to be, don't see the setup yet. If anything, I said I would have missed the NQ long. Not missed. I was ready. Place my order. Ah, damn it. Damn news event. Agent Smith, next time don't tell me we have news. Bullish fair value gap, inversion fair value gap. Let's see how we move through that. First target obviously would be the short term high. All right, I'm going to fill up my water bottle. Taking a quick break. See what the chart looks like if I have taken that break and come back. Interesting. We had our first rejection up there. Personally, don't matter. All right. Yes, pushing and respecting our inversion fair value gaps. About to yet deliver into our 1 hour bearish fair value gap right up in here. Let's see, that's my first entry, but now I'm looking for further confirmation on why price would reject here of our bearish breaker block paired with the hourly bearish fair value gap without much risk. We have a 15-minute bullish just below us, so I want to point this out. We could simply hold support here and push up higher, FYI. But I'm going to be focusing on the 5. And once again, 10 fucking 30. $10 a.m. opens up. First 30 minutes, we push up higher. 25. 30 minutes are over. We open up. Boom. We turn around. $2.30. Where's that? $3.30. So if I would were to point that out. All right. Risk, stop loss, back above that high. Risk 250, take profit target right here at that low. Sell. Double inversion fair value gap, I very much like that. Here on the 5-minute time frame. What else? So why am I interested to take this short? Well, first of all, we have our 1 hour breaker block right here after forming a high, low, higher high, failed to hold and form a higher low. For a new higher high, we broke below that, closed below it. So we look at that lowest stone closing candle from this price leg right here as our bearish breaker block. And then overlapping with it, we had a 1 hour bearish value gap. We filled it in, and we still have nice sell side liquidity that is yet to be taken down below, which I'm going to be using as my drawn liquidity. That Tuesday's low. And then I'm going to the 5-minute time frame, looking at confirmation of this retracement Doesn't look like a retracement if we are just focused on the 5-minute time frame. But if we actually combine higher time frames with the lower time frames, we don't know for granted. It's just a speculation that this is a retracement and that we're continuing lower of the 1 hour bearish fair value gap / breaker block. If we lose, we lose. It's part of the game. That's why we manage our risk wisely. But, well, I think that's the best setup that at least I'm able to spot right now. Oh yeah, sorry mate, I forgot to look at gold earlier when we talked about it. Yes, also started to disrespect the bullish fair value gap right here and this inversion fair value gap closing below. Let's see. It's okay, you convinced yourself. Let's see how this plays out. This already looked sus to me. The failure of momentum. We're losing momentum inside a point of interest on the hourly time frame, and now we're turning around. Sus. How much do I have at stake? 240, 200. Yeah, that should be fine. Almost 1%. The S&P. Looking similar to what we saw earlier on Nasdaq with the market structure shift. Breaker block right here on the 5-minute time frame. Yep, gold up we go. Nice catch, Bongo. Euro USD is doing something similar. Also with a inversion fair value gap setup. Yeah, gold is flying literally to the moon. After being dropped to earth. Entry on the inversion fair value gap, stop loss above here, target Tuesday slow. Hmm. 1 million in payouts in just one day. Not bad. Alright, looks like we're on the right side. Nice trap. Turn around at the 30-minute mark. It's, well, don't want to blow my own horn, but you get the idea. Let's just hope it works out. My stop loss is based on this high. I'm anticipating at this point in time, once we invalidated those two bullish fair value gaps, that this high is not going to be violated anymore. I'm basing this entire trade off on this move to the upside being a retracement on the hourly time frame into this blank space right here between those three candles inside the breaker block. So that's essentially what I'm looking forward to. At the beginning of the stream, we actually caught the long inside of this area to then afterwards take the short. Then, like, I don't know, over the last couple of streams, I always pointed out how often we like to turn around at the 30-minute mark, 9:30, reverse it to the upside to deliver back into that 1 hour bearish fair value gap. And then at 10:30, so just before I left to fill up my water bottle, I said, okay, we're in here now. Let's see if we can catch short reversal at 10:30, which is essentially exactly what's happening now. The question is, will we get the continuation into Tuesday's low? That's a big if right now. But yeah, essentially at this point in time, after we closed below the highest two bullish fair value gaps, I'm looking forward that this move right here is done and over with. That's why my stop loss is right above this high. My first entry was somewhere right up here. And at this point in time, I was not certain enough that the retracement is over, because we could have bounced off here and form a new higher high. That's why I placed my stop loss up here, just in case. Hope that makes sense. Nah, damn. Getting that rejection. But I don't think we have anything to worry about. No, we have a nice... Let me actually hide the 1 hour stuff now. A nice 1 hour bearish fair value gap. And our stop loss is right above here. That should be fine. Like I said, it's a speculation, like every trade is essentially. Memory for time to put on some music. What's the time? The time's 46, so we have 15 minutes left for this hourly candle. Interesting. 15-minute time frame. Like I said earlier, I pointed out that we have a 15-minute bullish fair value gap right here. So we don't want to see a support bounce in here to form a new higher high. That would essentially mean, yeah, we're going to lose that trade, but that's why we don't risk the entire account on that single setup. Of course you can, if you don't mind spending 200 bucks on a funding account challenge, or less if you trade with futures. But it's a risk you take on, and well, it's still some sort of risk managing. Just gotta make sure you actually manage it and you just don't blindly trade into it hoping it goes your way. Because more often than not, it won't go your way, and yeah. Then your ego feels attacked. Take on more trades, more risk to make back your profits or to reduce your losses. Never ends well. Looking good. 11 minutes to go on this 15-minute candle. Also the last 15 minutes within the hourly candle. Just want to make sure we don't bottom out here. So the only real resistance I see from this point would be a slight bullish fair value gap, because we used to hold support on here before, right here at the 10 a.m. opening, and essentially down closing candles within an uptrend tend to hold support if we're within an uptrend. Let's see if I can find a good example. Not really. No. I have to look back too far. Let's see. Yeah, still respecting the lowest bullish fair value gap. 1050 now, we're inside the macro. Let's see how this plays out. In queue with a nice close now. A nice lower close after two inside candles. We had this 1030 rejection, two inside bars, and then we continued lower at 1045. If you've noticed, we tend to move on the 15-minute mark. So right here, just for you, if you like, yeah, never looked at price action this way, at 1030, right here at this opening, the new 15-minute candle opened up and expanded lower. And by the time this candle closed, it's 1035. So that means the 1035 candle is opening up. 5 minutes pass, we close. The 1040 candle opens up, it's closing. And we typically tend to get our moves on the new 15-minute candle opening candles right here. This is the 15-minute opening at 1030. And then so 5 minutes, we drop. Then we do essentially nothing for the next 10 minutes if we only look at the candle bodies. And then 15 minutes are over. And the 45 15-minute candle comes in. And we expand lower. Hope that makes sense. But it just goes to show how fractal price really is. Everything you see on a lower time frame is a representation of what you see on a higher time frame. It's one of those optical illusions where more deeper you look, the deeper it gets. I don't know if that makes sense, but I think you get the idea. If not, feel free to ask, please. Someone's typing. Nice. You're well explaining. Thanks. Thanks. Thanks for the feedback. Really appreciate it. I actually enjoy explaining things. So, yeah, like I said, feel free to ask questions. Let's see if we get the close below here. And maybe also on ES. That would really be the confirmation that we are going to at least head into the new week opening gap. I think ES might even want to continue all the way down to, well, maybe not today, but the 50,000 level, 29 points left. That level is interesting because it has 3 zeros. Much easier. Let's assume you're a market maker and someone's calling you on the phone telling you that he wants to buy a shit ton of S&P 500 futures contracts or offload them there. You're not going to tell him to buy at 5004 just because there's some liquidity right here. You're going to tell him to buy at 5000 because it's much easier for you to book the transactions. You don't have to do any complicated divisions or anything. It's simply 5,000. How much you want to buy? 1 million? All right. Going to lock you in at 5,000. They're not going to say we're going to lock you in at 5,009.25. Makes sense. So usually those 00 and 000 levels, yeah, that's why people reference them as institutional levels. Makes sense if you look at it from that point of view. Usually it's the 00, or in this case the 000, and then 25, 50, 75, and then it's a 00 digit again. And you could almost look at price just from this point of view. I made an indicator for that. What's it called? Institutional levels by Ethermed or by AZ? That's the question now. Let's do Ethermed. Let's do both. Bank secrets, institutional levels. I think they're both the same, just with a different name. Yes, so we want to show 4 levels and we're going to plot the base level at 5,000. Let's see how that works out. So we have our base level at 5,000 and then half levels at 50. Yeah, and then we could also show quarterly levels. Then we would essentially look at price. But not a quarter level is the thick one. I don't want that. Let's get rid of the quarterly level then. It kind of helps you to look at price from a different perspective. But, well, it's a certain kind of confluence in my opinion. You really would have to shape your edge around that in order to make it work. It's not like, okay, I'm going to sell at 5,300 and hope it's going to drop to 5,250 and make 50 points like that. It's a good, well, I don't know, measurement system of how much price actually moved without, because most people forget how much we actually moved. If you look at it from here, from this high all the way to this drop, it seems pretty convenient that this high was right around the 300 00 level, and the low of this entire run to the downside was at the next 00 level, which was 5200. Pretty convenient. Similar story here. Broke right through the 50 level, target the next 00 level, and from here ever since we consolidated around this level for quite some time. Hit the next. Of course, in some scenarios it works better than in others, but that's why I keep telling you it's more of a confluence than a confirmation. But helps to put price into perspective of how far we actually moved. If you guys want, I can put the indicator in here. You want the indicator? I think it's private, I'm not sure. Let me know and I put it in the chat. In case you want to play around with it a little bit. Alright, so we closed below the bullish fair value gap here on ES. On NQ we still closed inside, but at least it's a nice close. Let's see. 10:55 we get a new hourly opening very soon. Let's see how that plays out. Option levels over the chart. No, I haven't. I never really have been, no, I haven't really been involved with options at all. I don't really know how they work. I only know that people make shit tons of money with them, but it's usually high risk, high reward, if I'm not completely wrong. Well, if you send me over the info on what the option levels are, do they change? If they change, then how do they change? And yeah, send me over that info and I can see if I can plot it on the indicator. But essentially, the way how I designed the institutional levels indicator is you have to plot your ground zero line or your baseline yourself. So usually what you have to do, if you're on a chart other than the S&P 500, you pick your 000 level. For example, on NQ it would be a 000, quadro 0 or whatever. You know what I mean. And set the levels based on that. There's no unique method for all the different instruments that you can trade to plot these institutional levels. You haven't gotten to the stage where you understand how to use indicators to your advantage. Well, let me break it down to you. Most people use indicators because, well, at least that's my personal experience. Let's keep it at that. Most people use indicators like the RSI, stochastic RSI, to get confirmation. So let's, for example, say your MACD or stochastic RSI or whatever indicator essentially gives you a signal. Let's say, for example, a bearish crossover, essentially just when two red and the blue line are crossing over, and then they trade based on that specific signal, essentially with the key ambition, the key ambition is to remove your own sort of analysis out of the equation, based on the fact that we as human emotional beings do most of the trading mistakes. So then the solution would be, okay, how can I remove myself from that equation? Usually people end up with algorithms or bots and automated trading strategies instead of working on themselves, because it's the easy way out, makes sense, blah, blah, blah. Not saying indicators don't work, but you have to be the type of person that makes the indicator work. Usually it's not the indicator making a strategy work, you make the strategy work. You still have to execute them. Yeah, but essentially that's just looking for signals in the same way like we're looking for signals right here. Okay, we got the close below our fair value gaps, that's my entry signal. And if I would pull up, let's for example say the stochastic RSI, which is essentially just measuring relative strength, also showed the crossover signal on this candle close. So stochastic RSI traders, they would wait for this candle to close right here, this candle close. Their signal is confirmed. It's actually confirmed on one candle after this candle close, because most indicators are lagging behind, because they use certain variables on price. Let's say for example, yeah, they use price and they put it on a, well, they compare different arrays of average price. So you have your average price over the last 10 candles and over the last 20 candles. And that array is shifting through and through and through price, and that's creating a delay on the indicator itself, if that makes sense. Getting a push 11 AM might be a new hour fake out. Could be a potential head and shoulder low formation. I'm gonna hold on to the trade, I don't mind. That's usually what we see once a new hourly candle opens up. Instead of just continuing, would be very convenient if it would just continue and everybody's already on the right train. Usually not how it goes. It likes to screw with people a little and show them, oh, okay, let's better get out of my short. That might not work out, blah, blah, blah. And then they're gonna take it down anyway. And while they pushing it up higher, it also makes sense because new longs or new buyers are jumping on the longs. So while getting rid of existing shorts, new buyers enter the market, and new buyers, if we continue lower, are just new liquidity for market makers if their intention is to drive it lower. Okay, damn. What an explanation. But yeah, I'm still also using indicators, the ICT all-in-one. Actually, you can also combine both of them, but essentially it just depends what you like the most. It's always a good, like, for example, the VWAP, the volume weighted average price, would also be, hang on. The VWAP would also be considered an indicator, but I'm simply using it as a confluence. Volume weighted average price makes sense why price would want to return to that level and potentially bounce or break through it. Well, I would like to reference that point. In the same way, it makes sense that if the RSI, damn, what's happening now? If the RSI is above 80, or the stochastic RSI, that we're sort of overheated or overbought. That's the term usually. So we're above 80. We're in a overbought market condition or market environment right now. And right here we are oversold. But we can see, well, right here, was our lowest point on a stochastic RSI, but we actually went lower while the stochastic RSI went up. So that would be your typical stochastic RSI divergence. And you would use that as confirmation if you use the stochastic RSI, for example, to long right from here. You have your bullish engulfing. This would be your candlestick confirmation, if you want to call it that. And then you also have your stochastic RSI confirmation. But this is not a secret, I don't know, glitch in a matrix. Sometimes those setups work out and sometimes they do not. That's why risk management still comes first. So in whatever way you use indicators, essentially comes down to the same thing. Katya, what do you think about the short? You're still in the short? Did you already secure? Let me actually take a look of the 1 minute bearish fair value gap here. Stop loss at the high. Almost hit a 2-to-1, but didn't hit the 2-to-1 just yet. Exactly, VWAP and volume, because they're not lagging behind price. They're real-time indicators and they're really rare to come by. If you look at your typical moving average, well, that's always lagging behind, and yeah, I don't know. Depends on your edge and your strategy. For me, every time I use indicators, personally, that's my own experience, I kind of felt a little bit stupid because all I do is wait for the indicator to tell me what to do and then execute based on that. I'm like, fuck that. That's not what I want to do. I want to actually know why price is moving, and yeah, hence the ICT concepts. Too low to sell, too unbullish for... Well, we'll see. Yeah, I wasn't keen on today. Too low to sell. Yeah, of course, makes sense. Here on NQ, you're relating to NQ, or are you still talking about your massive gold long? Yep, like I said, the only thing that we really would have missed would have been that 940 long. We pointed it out on the stream. I decided not to take it because of 10 a.m. news. You never know. Already made some decent profit today, so I decided, to pass on it. Depending on how the setup plays out, it's going to be really interesting. We could maybe make another higher high. I don't know. We already had a pretty large move prior to the New York Open here at 9:30. And now that, right here at 10:30, we turned around and we continued lower for the remainder of, so first 30 minutes, we continued up higher. Next 30 minutes, we continued lower. Question is, next 30 minutes, are we going higher again? This would be typical for, choppy market conditions. Gonna be interesting to watch. But besides that, I think this initial move to the upside is some sort of a fake out move. If we look at the 15-minute time frame and look at the fair value gaps here, I would be looking forward to see this 15-minute inversion fair value gap to hold resistance. We have a 15-minute bearish fair value gap. So if this 15-minute candle can manage to push above all of this, well, this would essentially be the confirmation that we are likely going to take out the high. Otherwise, I would watch and see how this is being respected or not, like I said. We already managed to push below it. That was the first if. Then managed to continue much lower than that actually. And now the new hourly candle opened up. That's usually when price likes to go for a bit of a ride. So we see. One hour time frame. Very nice bearish close. No real reason for price to push back up into that area unless we're chopping around. Going to take high and then drop. You're out of your position, Kati. Like I said, this is our 15-minute stuff. Then we have our 5-minute stuff over here. In 1.5 minutes, we get a new 5-minute candle. So what we essentially want to see here is this flipping over with that new 15-minute candle and closing back below here, and then continuing lower. Best case scenario, of course. But it took, yeah, usually I like my trades done within the same hour of my entry. Just makes it much easier. But not every time, yeah, we get those setups that just deliver super quick. Those are your prime setups essentially. Yeah, bungo. Would be nice, right? Would be very nice. 15-minute time frame, let's see. Yeah, we have that 15-minute bearish. Like we said, we already pointed that out. We have our 15-minute inversion. Let's see. New 15-minute candle just opened up. Usually we like to move in, yeah, at least if we look at the 15-minute at every lower time frame in 15 or 1 hour intervals. So we like to go 15 or multiples of 15 up. And then we, yeah, switch gears. Multiples of 15, 30, 45. At those times we like to do those things. And then of course the same thing that's happening every 15 minutes is essentially happening every new hourly opening. If we look at, so let me try to write that down, otherwise I just confuse myself. So within 1 hour we have 4 15 minutes. And within every single 4-hour candle, we have 4 1-hour candles. And within every 1-hour candle, we have 2 30-minute candles. And that would, the same thing would be 2 2-hour candles, even though I'm not really looking at the 2-hour time frame. We never really use that time frame, so we're essentially ditching that. But the same thing that we're looking at here on the 15-minute time frame, the new hourly candle opens up. What we use it for is, most of the time we see, or we hear even people talking about time over price, and what they mean is that the new hourly candle opens up right here. During the first 15 minutes, if this is playing out, we open up, we push up higher first, trapping for that new hourly opening, traders into a specific direction. Then the first 15 minutes are over. Sometimes we consolidate, but this would be your typical accumulation, manipulation, distribution pattern broken down with time. So 15 minutes pass, we switch gears and we continue lower. Next 15-minute time window is open, is done. And now the first 30 minutes of this entire hourly candle right here are over and done with. So usually what that then tends to happen, we continue lower for the next 15 minutes. Then we get some sort of a pullback. If that makes sense. Other times, we continue higher first for the first 30 minutes, like we did over here. We open up, we continue higher for the first 30 minutes, and then we get the retracement for the next 30 minutes. So there are specific patterns if you fractalize your thinking, if you look at candlesticks, essentially. Only a specific amount of things that price can do. And the same thing that I explained on each 15 or 30-minute fractal within a single hourly candle can be broken down to a 4-hour candle, but instead of 15-minute intervals, we have 1-hour intervals now. So a 4-hour candle consists of 1 hour up, 1 hour chop, 1 hour reverse, 1 hour continuation, for example. That's what it could look like. But yeah, makes sense to split it up into those fractals, because we see it works pretty well. Or we just can't. Yeah, it's still to be used as confluence, because you tend to see the same patterns over and over and over again. And if you're aware of that fact already, and you can think multi-time frame, instead of having to look at each and every time frame here on, let's say, for example, this 4-hour time frame. I'm recording it so you can watch it again, but what we essentially have done right here, what could have happened right here is that we retested this up closing for our candle right here with this wick. If we then break it down to the hourly time frame, we have this breaker block paired with our hourly bearish fair value gap. Now if we break it down to the 15, we retrace into a 15-minute bearish. I don't know, for me it doesn't make sense to go up any higher. I'm pretty good at convincing myself that the trade that I'm in is pretty good. Bongo exposed that yesterday, but well, let me break it down again. You have your entire hourly candle right here. You have that 30-minute mark. And then you have your 15-minute mark. That's really getting deep down the rabbit hole. So yeah, I don't know, might take a little while for you to understand. But what we saw, for example, right here, 10 a.m. opened up. We already saw a market structure shift. First 30 minutes pushed up higher. So let's say we open up right here. We see the first 30 minutes, first 15 go up, next 15 go up. Then at 30 minute, we shift gears. Not sure how to draw this, but at 30-minute mark, we shift gears. And then we continue down for the next 30 minutes. And that's essentially your pattern number one of what could happen eventually within a single hourly candle. Sometimes we see different patterns. I'm not sure. I think I'm also losing my thought train here of what I actually wanted to say. But the only important thing to remember is that those are key points within a single hourly candle. If you only have 1 hour available within a particular day to trade, then I would really start to break it down into quarters and halves and look at, well, these specific timings. 7:30, 8:30, 9:30. 9:30 is the New York opening. So that's the interesting part, I'd say, yeah. But yeah, sometimes we're just trying to overcomplicate things. Let's take a look at ES. Interesting. So ES is definitely looking like it's going to take out this high. See that right here? We retraced into the bullish fair value gap. And our old bullish fair value gap right here with a nice wick. And now pushing up higher. ES is definitely going to take out this high. Also never actually retraced into our hourly bearish fair value gap. So actually a nice potential long here. On NQ, I don't really think that we're going to, well, I don't know. I think I might just get out of the trade and get on with the day. We made some profits. It's 5:24. And it's time for me to end the stream also. But we get the idea. What I would be looking forward to, what we could potentially see now, would be SMT divergence between ES and NQ. ES pushing above the high, NQ failing to push above the high, and then something like this. Bearish SMT divergence. Some sort of a setup here on NQ. I mean, everything's still intact. 15-minute time frame is working out nicely. But I really want to get going off stream. We've been streaming for 2 hours now. And that's usually the max amount of time that I want to spend in front of the charts in one single sitting. So thanks very much for joining in today's live stream and asking so many questions. Really appreciate it. I will upload the recording. And yeah, gonna be back tomorrow for a Friday live stream. No worries, guys. So if you're still on the short, don't worry. Just because I close doesn't mean you have to close. I just get going, and I don't really want to bother about having to monitor a trade on my phone. No, not today. Thanks, guys. Until tomorrow. Bye.